How's it going, everyone? It's Sam. Michael Saylor just explained why more companies aren't doing what they're doing, what Microstrategy is doing. And he talks about how in January that could change. Less than 3 months away, that could be done. We could see a lot of companies start to implement the Microstrategy playbook. I want to go through that. If you don't mind, hit subscribe, turn on the bell notification underneath the video so you can see future videos just like this. Also, check out BTCC underneath the video. They have very deep liquidity. They have up to 250x leverage. You can trade hundreds and hundreds of different assets. And as you can see, we had a pump this morning. I actually made my video right when we were coming down from that $68,000 pump. And as I've been saying, I think this is a time to be leverage trading. So the video actually went live and I commented, hey, we will see another pump. And in that video, I said I was not surprised to see us fall down a little bit because when you scroll out to the 1 day, we are right at this trend line that we've seen before. We got rejected by it, but I said it could take a little bit more time. We're not probably going to bust right through it the first time we try to. It's probably going to take a little bit of effort. So we got rejected, came right back down. Now we're moving back up. So if you want to trade, you're still trading before we do the inevitable breakout. You could always put a stop loss right below too. So if you wanted to go long, let's say, and then put a stop loss at, 64,000, or even if you want to get more aggressive, 66,000, you could protect the downside in case we get rejected again. But if we have this inevitable breakthrough, which I think is going to happen, all hell's going to break loose. And I've been talking about this. This is why I've been placing low leverage longs while we were lower, and why I got a little bit more aggressive around 60K, because we have seen higher highs and higher lows. So I am quite bullish right now. If you want to trade, again, there's a link to BTCC underneath the video. They have lower fees than a lot of other platforms, so definitely check that out. Bitcoin moving up to $67,000 today, extremely bullish. A lot of people watching MSTR as well. Let's just look at MSTR. It has fallen down a little bit the last few days, even though Bitcoin's been moving up. But part of that is they're most likely doing at-the-money offerings. So they're selling shares and they're buying Bitcoin with it. That's how they get more Bitcoin per share. They dilute a little bit. Now, this has been a great strategy for them over time. Over the last 1 year, they're up 508%. A lot of people wondering, why aren't more companies doing this? Like MicroStrategy's blown up. Of course, Bitcoin's up a good amount this year, but nowhere close to 500%, maybe 100%, maybe a little bit more than 100% in the last 1 year. So people are thinking, well, why aren't more companies just issuing debt, using leverage to buy Bitcoin? And Michael Saylor actually just talked about that. He just posted this, my discussion on Bitcoin, MicroStrategy, and the digital transformation of global capital markets. And this is on On-Ramp Bitcoin, the podcast. So we'll play this here for a second, a couple minutes actually. He talks about why this will change. Certain things will change in January that makes this all very exciting, I think, for us as Bitcoin investors. Let me play this for you, though, and then I'll expand a little bit.
You laid out the Bitcoin treasury strategy for your company, MicroStrategy, about 4 years ago, and your stock has outperformed all the big tech companies. Why do you think we haven't seen more companies implement your strategy yet?
I think the three big planks of corporate adoption of Bitcoin are, number one, fair accounting. And we started with indefinite intangible accounting, and we get fair value accounting in January of 2025 that's mandatory. So there's been about a 4-year period of normalizing the accounting. I think the accounting is hostile and prejudicial to a well-run company. Just because if you can only lose money and you can never make money on an investment, a reasonable CEO or CFO would say, I don't know if I want to make that investment. And so even though the reality is you would make money, on an accounting basis, it would look like you're losing money. So I think that was the first challenge.
Let me keep on playing this, but I know a lot of people will understand this, but there are new people here. So how it works right now is we have intangible accounting. If someone goes and buys $1 billion worth of Bitcoin at $50,000, and then Bitcoin goes down to 25,000, or let's say even 40,000. Let's say you buy at 50,000, it goes down to 40,000, then goes right back up to 50, and then 60,000. You would think that you had to have a 20% gain at the end of the quarter, right? You bought in at 50 and it went up to 60. How it shows now is it actually is a 20% loss. It gets marked down to the lowest price that it was during the time that you held it. That changes here very soon. It changes so that you actually show the value, just like you would if you had an investment, like your net worth, right? In an investment in your net worth, when you're looking at your net worth, it's whatever value is attributed to that asset right now. It's not the lowest point since you bought it that you value it at. No, that's not how it works. So that is changing here in just a few months. But let me get back to a couple other things that will change over time.
The second challenge is fair treatment as an institutional asset, via the Securities and Exchange Commission or the major financial regulators. And we started to get that January of 2024 with the approval of the spot Bitcoin ETFs. And before that point, a lot of skeptics were of the opinion that maybe it would be banned, or they're not sure it's an actual real asset. You have all the skeptics saying it's tulip bulbs or it's a Ponzi scheme or something. But of course, the SEC would never approve an ETF for a Ponzi scheme. So probably for people that don't really think hard one way or the other about this, the reflexive investors, they're looking for that endorsement from the most important financial regulator in the world, or regulators in the world.
So second, the endorsement by the SEC to basically stamp of approval the Bitcoin ETFs. I mean, just yesterday, at the time of this recording, we saw over $500 million flow into those Bitcoin ETFs. We've seen an incredible amount of money flow into those over this year. So that's changing right now. The second reason why someone might not want to invest their corporate treasury into Bitcoin.
So that was plank 2. And I think plank 3 is fair treatment from the banking system. So right now, it's impossible for most major banks to custody Bitcoin, buy Bitcoin, or sell Bitcoin for you. There are a few banks in Switzerland. I mean, there's Standard Chartered Bank in Europe. There are some of the banks in Brazil that can handle the asset. But the major corporations, right, the Microsoft, the Google, the Amazon, the Apples of the world, they wire billions of dollars a month to a too big to fail bank, right? A bank with $1 trillion balance sheet. And right now they wire the billions of dollars a month to buy sovereign debt. They're just saying, okay, take this $1 billion today and buy T-bills with it. And it's like a 10-second transaction. It's routine. They've been doing with the business with the same bank for 30 years, 40 years. Citi is National City Bank. National City Bank was the bank of John D. Rockefeller, run by his brother. Okay, that tells you how far back. J.P. Morgan, right? Try to remember who founded J.P. Morgan, right? And how far back it goes. J.P. Morgan wasn't the first, right? He took it over. So what you have are these 100-year-old banks and 100-year-old relationships. And at the point that a CFO can send $1 billion of cash to their bank, buy $1 billion of Bitcoin, do it and hold it there, no risk, right? Or what they perceive as no risk, right? These are too big to fail banks. So the shareholders of Apple and the shareholders of Microsoft, they're not obsessing over the risk that Apple and Microsoft take to do business with Bank of America or JP Morgan or Citi, right? Or Wells Fargo. So that's a very important thing. When you've got all three, when you've got fair accounting, when you've got fair, securities treatment or trading treatment, and when you've got fair banking treatment, then you'll see mega corporations that will think, okay, well, this is a reasonable thing to do and it's practical to do. Until you've overcome those three, then you've got problems to solve.
Yeah.
And obviously that third pillar that he gives, or the third plank, is changing over time too. we will see banks that are able to custody Bitcoin. We've already seen certain steps in the right direction, with one bank in particular kind of getting around that, it seems like. So that's coming as well. So I'd be on the lookout for all these different things when you're evaluating how bullish you are on Bitcoin for the future. Evaluate when you think companies will start buying Bitcoin. And it seems like January is a massive step in the right direction. We're getting constant steps in the right direction from the SEC and from maybe legalization of banks being able to custody Bitcoin as well, or making it easier for them to custody. Maybe not legalization, that's not the right framing, but I think that's all coming down the line, and January is a big step. So it'll be interesting to see at the end of the first quarter, are there more institutions that have bought Bitcoin? Is that what pushes us up for that crazy bull run of 2025? Is there a tech company or a couple tech companies that start buying Bitcoin? Let me know down below in the comment section. Again, if you want to check out BTCC, sign up for it, deposit, start trading, no KYC. They've been around for over a decade. So definitely check this out underneath the video. I really appreciate you all watching. I'll see you all in the next one. Bye.